Um, Good afternoon, ladies and gentlemen, and welcome to this week's trade review session. Apologies, somebody just rang me as soon as I was starting there, so I just need to make sure I get rid of that. The market's obviously open now, and we've done a few trades during the course of the day. It's been a decent day today, but it's been a troublesome week. Is probably the best way to describe it. I think it's left me feeling a little bit tired as well. So we'll just go through a few things, a couple from today and some from during the course of the week. Obviously, just before the opening bell in New York, I decided to get long the market. Part of the rationale behind that was that the DAX was holding up a lot firmer than moves that we were seeing in the Dow at that particular time, and it just felt like there was going to be a move to the upside. So I bought into the DAX at about 13,184, and as you'll know, I've just managed to close out of that trade at break even. Now, it did pop up just a few minutes ago to about 13,200, so there was some profit in it. But what you'll see when you contrast this with, so if we go back to the opening bell time, so about 1:30 on this particular chart, you'll see that it didn't do a great deal. Whereas when you look at the DAX, the movement to the upside was the right movement. When you look at the Dow, the movement to the upside was the right movement, but it happened in the Dow rather than in the DAX. And here you can see the movement there, up to about 27,700 before it started to move back downwards from that point. But you can see there's quite a lot of movement in this area. We've been up to about 27,720, and we've been all the way down to about 27,550. So a big movement in the first 30 minutes or first hour that the Dow has been open. So lots of opportunities if you're getting that range right. As you'll know, the limit to my trading in this period is usually in the first 5 to 10 minutes. And as we see the results sheet for this week, there's a few things that I want to talk to you about in relation to that. So let's move on to the results. Please, if you have any questions, please send those through, and I'll do my best to answer them during the course of this session. The earlier you get the questions in, the more opportunity or chance there is for me to answer your question. But as always, I'll do my best to get round to them all during the course of this brief session. So here are the results for this week. So as I said, it's been quite a different week. We had a particularly bad day on Wednesday. By no means the worst day that I've had over the last few months since we've been doing this. But a bad day and lots of errors within it. You know that I always like to start with the negatives and the things that have gone wrong, and Wednesday is definitely a case in point in relation to that. The better days from a trading perspective were obviously Tuesday, which had a fairly significant result for us, 622 pips to the upside, but still a negative within that I want to talk about. And then yesterday again was a very trying day. We had to wait for the moves, got stopped out on one gold trade, but then eventually the market turned around and pushed in our favour. 225 pips to the upside, and then today another decent day. Sorry, I haven't filled the on this particular screen, the DAX trade there in yellow is at break even. The gold position, I am still short gold, and there's a loss of about 80 pips on that, so it takes the profit for the week down to about 624 pips, and you'll see that when the results sheet comes out in a while. So gold is still open, the DAX is closed, and the gold at mark to market is at the moment is showing a loss of about 80 pips, so that will be reflected there. What you'll see on the results sheet this week is that there's a grey line there along number 21, and then a darker grey blue line from that particular point. And what I wanted to try and show on this, and I don't have these in there all the time, but what I wanted to try and show here was where I over traded. So for those of you who've been with us for some time will realise or will know that I normally do somewhere between 12 and 15 trades a day. So in the white, that's 16 trades. And anything beyond that for me is over trading. And as you can see on Tuesday, there was a certain amount of over trading of 6 trades beyond what would normally be my limit. So this is not an example of getting carried away with some of the success I was having that during that day and pushing that on. The negative part of that is, you know, in exceeding that normal daily limit that you would have from a trading perspective, the following day it's happened as well, and there've been you know, there were a number of stops early in the morning, well, 2 there in the DAX, 1 there in the and two in the Dow early in the morning, and those you know, that over exuberance, if you like, which appeared on the Tuesday has continued on the Wednesday, and I've over traded to the extent of 2, 4, 6, 8, 10, 12, 14 trades. Now some of those were positive trades, unfortunately 3 of them were quite negative, and that's what's resulted in a total loss on the day of 387 pips. So be careful, number one, of over trading. Look at what your normal daily volume is over a period of time, and if you start to exceed that, then certainly start to question yourself as to whether or not you are over trading at that particular point. That for me should have been a red flag, should have been a warning sign that I should be thinking about stopping trading at that point, which would have been would probably have been a good point. The trading that continued thereon hasn't been, certainly wasn't a break even from that point, with the 3 stops that came out after that particular period on the Wednesday. There was a further loss in that. The other thing from a personal perspective that should have stopped me trading during the course of Wednesday was the number of stops. So total of 7 stops, which is just ridiculous. I shouldn't have allowed that to happen. And after 4 should have been really seriously considering whether there was anything else in the day, and perhaps calling it a day at that particular point. So a couple of different warning signs that for me would certainly have resulted in a different return on the week, and certainly in particular on Wednesday. One of the key things that I want to be during the course of the week is consistently or showing consistent returns, and certainly this week there was a little bit more deviation from that, certainly between Tuesday and Wednesday, and I do try to avoid that. And so what I wanted to do with this particular screen today was to show you in a visual format at what point I should have stopped trading on those days, and perhaps reflected on it from that point. So just looking at the summary a little bit further down, again you've got the graphical or visual representation of the profit. So the profit for the week, it's down to 642 pips now until I close the gold trade. Isn't markedly different from or the gross for the week isn't markedly different from what we're going to see on Tuesday. So I always remember when I was working in London and again in Singapore a few years after that, some of the most successful traders were the guys who knew when to stop. And Tuesday, after the 622 pip return, might have been a good time to stop. Certainly might have avoided Wednesday in that regard. So just in the summary, 13 losing trades on the week, 80 winning trades, so the ratio there is still very much where I'd like it to be. The only negative product for the week, it was the DAX. The DAX has been, as you've seen today as well, the DAX has been a lot more resilient than the Dow to some of these movements that we're seeing to the downside. Gold has been a mix throughout the course of the week, been stopped out on a couple of occasions, and again today are going to be taking a hit on gold. So the profit there on gold will be down to about 100 pips on the week. And the Dow, with those nice movements that we're seeing in the Dow, we're having a decent return again there with 46 trades and 761 pips. So just a few questions coming in, and we'll get to look at those in a few minutes. There's a question there from Chris. Is the US, and I'm just going to open up the markets again. So Chris is asking, is the US session too volatile to trade right now? He seems to have good results in the last hour between 8 and 9. I think the period, Chris, between 8 and 9 can be equally as volatile. You do see some big movements, especially in the last 15 minutes of trading, as a lot of orders start to hit the tape before the markets close. And you can get whipped around quite aggressively in that last 15-minute period. So certainly between 8 and 8:45, it might be a better period. You do tend to find that certainly in that 8 to 8:45 period that the market moves in one direction, but in that last 15 minutes there is added volatility. As you get some orders that are looking to either close before the bell, or potentially some orders that are looking to benefit from some of the earnings that come after the closing bell. As you know, I like that first 10 minutes around the opening bell. As the stocks are opening, there is an added degree of volatility during that period, and I study that period quite a lot to try and initiate the trades. Today was another case in point, I suppose, going against my usual trend of shorting the market for that particular period. We bought, or I had bought DAX, and I chose to stay with that position rather than do something in the Dow. But the DAX didn't really react, and it was the Dow that bounced a little bit higher, and I've been wearing that DAX trade pretty much for the last hour and 15 minutes or so. So Chris is asking, how do you know when to take 20 pips rather than 30? It's a good question, Chris. It's and you're never going to get it completely right, to be honest with you. I still don't at this stage. There's a certain amount of feel to it. I think with the markets the way that they, and this leads on to the second question as well, with the markets jumping around the way that they are, and you're initiating your initial trade, I think it's worthwhile to put a TP level or a take profit level in there as you initiate the trade, and then you can make a decision. That doesn't mean that you have to wait for that level and laboriously wait for it to trigger. If you think the market's turning and going in the opposite direction, take what you have. You know, I'm a firm believer that where you have profit in a trade, rather than waiting for and we've spoken about this previously, a risk reward ratio of 2 to 1 or even 1 to 1, based on where your stop is, it really doesn't matter on a day trading perspective. You know, my focus is on keeping the ratio of winning trades far above that of the losing trades, and taking profit when I can. So you know, maybe put the TP in. But if you don't think or if the market looks like it's turning, it's not going to hit those levels, then take profit as you can. As you can see with the Dow now, we're rallying up to 27,750. So which is close to the high of the day, or we've probably just exceeded the high of the day. I think I did a sell around these levels earlier. But buying the Dow at the opening bell, you've had to weather a bit of pain at this stage, but nice movement to the upside at this point. Question here from Andrew: do you normally set a TP on your trades, or do you wait until you see an exit price and close out manually? If so, how do you identify an exit price? Again, and that I suppose that was why I answered the last question as I did. I think that you can set a TP level. This is both back to Andrew and Chris, You can set a TP level, but if it's not going to hit, then please take your profit a little bit sooner. And it's something that you're going to learn. I don't fixate on the charts. This isn't about looking at a minute chart or a 5-minute chart and identifying an area where we're going to hit resistance or support. This is more about feel and momentum at that particular point. So you can see with the ticker yourself, and you can see if we just look at the Dow over, now we've got a minute chart up here at the moment, so you can see how the rally has stalled as we've gone up towards 27,775, and had you bought into the rally somewhere around here, and you start to see the market tapering off, and you're putting some of your profit at risk at that point. I would far rather take profit and look to get back into the trade as the market fell back down to our original entry point. And if you can start to work out the ranges particularly well, then you can repeat this trade a number of times during the course of the day. I think what happens with a lot of people is that they do fixate on the charts and the technical analysis, and they're waiting for something that is going to identify that the trade needs to be closed at that particular point. For me, where I'm more concerned to be is being, firstly on the right side of the market. So the entry point for me is far more important than the exit point. If you're in profit and you're happy with the profit that's presenting itself, then take it. I much prefer to be on the right side of the market, and obviously there are occasions, as we've seen when we were looking at the results a little bit earlier, where I haven't been on the right side of the market. I've been stopped out, but thankfully they are far fewer in number than the winning trades. And if you do start to see a bit of momentum in a trade, just going back to the Dow trade, so had you been buying at any of these levels, and you can see the range there within this particular point, but you can see the movements that we've had. Had you been on the bottom of this range and buying, and you'd started to see the rally fizzling out around this sort of level, you could have got into that trade on several different occasions during the course of the day. So it's far more important, the entry is far more important for me, and being on the right side of the market, which is why I often talk regularly about the bias and the feel for the market. And it's rare. Now, I've bought a couple of trades. I think I bought one trade today. Everything else was from the short side. And again, that is cognizant of the nervousness that I perceive around the market at this point. And I don't see the market running away from us to the upside, whereas I think there is a bit of downside risk. It is a Friday. It is a risk-off type of environment. I don't think too many people will be adding too many equity positions over the remainder of the course of the day. And for me now, it's just about at what point do I close this gold trade that's a little bit against me. We're out of time. We'll talk again next week. It's been another decent week, a very different week because of the ups and downs that we've seen throughout the course of the week, but positive all the same. So no complaints from my perspective. Thank you very much for joining me.